Bengaluru-based car rental platform Zoomcar recently completed its SPAC merger and listed on the Nasdaq at the cusp of the new year. To talk more about this, I'm joined by Greg Moran, the founder of Zoomcar. Greg, thanks for taking the time out and congratulations on going public. My first question would be, why choose Nasdaq?
So Nasdaq is of course one of the premier global exchanges, and so it's something where for us as a global platform, we believe it's really the perfect springboard for us to take that next step as a public entity. And as you might be aware, we've over the last 2 years expanded our geographical footprint to not just India but to include Southeast Asia and the broader MENA region. So we have multiple countries under the operation and the stage, and we're certainly envisaging a further rollout across emerging markets in the coming quarters and coming years. So I think for us, we believe that's a fantastic platform to take it to that next level.
Right, Greg. Though it wasn't a blockbuster listing, right? How do you plan to create more value for stakeholders?
Mhm. Well, I mean, I think people have to realize that when you go public, it's always just one point in time, and being a public entity, it's a journey, and so just going and completing a listing is not a destination in and of itself, and value gets created over multiple quarters, multiple years, and generally speaking, there's a cadence and a trajectory towards building the overall footprint, building that story, building the narrative, and showcasing those fundamentals consistently over time. And we're confident where the fundamentals of the business are in terms of growth and profitability, and that's something that we'll be talking a lot more about here in the coming months.
Right. You spoke about fundamentals. I want you to dive a little deeper on that in terms of the revenues and the profits you've posted. The numbers are not very clear because you shifted to a newer business model. There was a separation. There was another company that came into the foray in terms of the host services. Could you give me the revenue numbers and the net profit or loss numbers for the latest quarter for Zoomcar Holdings?
Well, I mean, I think we're actually right now, in the midst of updating some of that, in the next couple of days. So I think we'll be, disclosing some of that. So I can't get into those specifics, just because that's not yet available. But we'll certainly be talking more about that. I think I can talk a little bit more about the last couple of quarters, which is out there in the public domain. And I think there have been, I would say, two big trends, for us. One is if you kind of look back to the beginning of the Q1 of the calendar year 23, kind of, and we kind of fast forward that a couple quarters, we've been able to dramatically transform our sort of operating losses and dramatically transform the contribution margins. So taking contribution margins at a booking level, which was several hundred rupees negative, so 300, 400, 500 rupees negative at a booking level, and turning that into something which was kind of consistently 400, 500, 600 rupees positive over a period of 2 to 3 quarters. That was, I'd say, the most material sort of fundamental financial transformation, all the while being able to grow overall scale and revenue levels by 15, 20, 25% over that same sort of time span. So I think we've been able to add increasing levels of scale to the business systematically, while also taking this into consideration from a contribution margin and overall operating loss standpoint. So I think this is what sets us up for what we want to achieve here in 24 and 25.
Right. Very interesting points there, Greg. The last question I'll pose to you is on the full profitability bit. Do you have an outlook on that already? Do you have internal targets set for that?
Of course, we do, and we'll be talking more about that in the coming weeks and months. But I think what we have already shared out there can reaffirm some of that, which is that certainly this 2024 we're looking forward to certainly a full year profit overall, and I think we're tracking well towards achieving that. I think what we see if we look out another 1 to 2 years, we see a, sort of steady state, EBITDA margins in this business, evolving to, 20, 25, upwards of 30%, over that, sort of medium to long-term tenor. And I think, with these sort of underlying unit economics, it's really a compounding of just, taking those underlying transaction economics and layering in more booking scale, to drive that, 20, 25, 30% EBITDA margin over the next, call it, 1 to 2.5+ years, like that time frame. And I think, it's certainly, this year, as I said, full year, we're very much looking forward to, achieving, overall accretive EBITDA for 2024.
That's excellent. Thanks, Greg, for taking time out.
Sure. No, thanks so much.